Hey everyone, I'm Thomas from Stock Outlet. Today is Monday, September 30th, 2019, and today you will learn the 5 most crucial tips for beginners investing in the stock market. Before we get started, I would like to give an overview of what stock market is and what investing in that means. A stock market is a place where companies can offer stocks in a public manner. Typically, a company is held in private, and these companies are not on the stock market. They still have shares, but they're privately held and the public cannot buy them. So a stock market is publicly traded. The public determines the value of the stocks by demand. Stocks are typically purchased with someone's bank. I bank with TD Canada Trust, and I use them to invest in stocks. If you're with CIBC, Scotiabank, if you're an American viewer, maybe you're with Wells Fargo or another bank. And this is actually separate from your savings account or your checkings account. This is a stock account, or other times called cash account or tax-free savings account, which we'll get into later in this video. A few more things here before we get started. To buy and sell the stock, like I said, you're doing it through your bank. So they have an online platform where you can go in and buy. So once you click buy, you're going to see a bunch of options to fill in. So you're going to have to put in the quantity, what stock, and at what price you want to pay for it. You can pay market value. Bank will actually determine what you're going to pay based on what the market is currently valuing that stock at. My favorite is a limit buy, because then I can just put in how much I want to spend on that stock. After you entered all that information, you simply put the order in and the bank will fill it within a time limit. You can also enter that. So if you want this to last a week or 24 hours or even an hour or over 3 months, you have a lot of flexibility with how long you put the order in. Once you buy the stocks, you'll be notified by your bank on the online platform, and you can see the stocks in your account. It will tell you how much you paid for it, how many stocks you own, the current value of it on the stock market, your gain, your loss. To sell a stock is very similar as to buying a stock. You would just go to your holdings and you click sell, and you can enter all the things I just mentioned, like the price you want to sell for and the limit you want to put your order out for. The order won't necessarily mean that you are selling the stock or buying the stock right away. It's simply putting the order out for you to be able to buy or sell the stock. And there's one more thing we need to go over before we get into these 5 tips. All these 5 tips are fundamental tips. These are the building blocks for getting started with the stock market. I'm not looking to sell you a dream of how to become a millionaire off trading. Look, it's simply not true. Everything that we do in life that is worth having takes hardship. These tips will get you off the ground and again will be your building blocks. If you complete these 5 steps, you will be able to make sound investments as a beginner and turn a profit. I want to make this so clear. These are the fundamentals you need as a beginner to invest in the stock market. My goal is to give the beginners the biggest bang for their buck. So I hope you enjoy, and I really hope this helps you. Let's get started. Tip number 1, start a budget. I know this isn't the most attractive advice you would probably hear, and I know a lot of people will tell you how I should get started in day trading or stock trading within a day, but I'm not here to tell you that. I'm here to give you practical advice that you can take and use right now. Many of you may not have money to invest in the stock market, so this is a perfect time to get started with a budget. As a beginner, we often don't have the cash needed to invest. It is great for your investing, but it's also great for your life, because we want to save for things that we want. So if you want to buy a house, you need to save for it. Or if you have your favorite car that you've been wanting for so long, you need to save for it. I'm sure we all can think of something that we've saved for, and you must have budgeted for that at some level. So here's how you get started. Look at the last 3 months of your spending. So go on your banking app or their online portal and print out the last 3 months of transactions. Start breaking them down into categories and adding the categories up to see the totals. Break them down by each month so you can compare 3 different months in your spending, so you really know an average of how much you're spending in each category. Categories could be entertainment, transportation, utilities, and the list goes on. After you've written down how much you spend in each category, for the last 3 months and you know the total amount you're spending in each of those 3 months, you can get an idea of how much you generally spend. The next thing you want to do is look at your income. So check all your deposits within your bank and add those up as well for the last 3 months. Now you can see if you're running a surplus, if you're running a deficit, or you're just breaking even with your budget that you're currently running. You'll need to minimize spending wherever you can. For example, myself, I was spending a lot of money eating out with my friends. So I was able to cut this down and use that money to invest with. And that's a great way to get started. One more thing here is make sure to check if your bank has a companion budgeting app. This will basically monitor your spending. So for TD Canada, they do have a budgeting app that can go with their banking app. And I can see every time I spend money, and I can really see how much I'm spending, and I can control it within my budget. And you can set all these things in the app. So it's really great and really easy to start budgeting. And there's so many apps out there. Maybe your bank doesn't have one, but there's definitely some out there that you can use for free. Tip number 2, open a TFSA. A TFSA stands for a tax-free savings account. This is a type of investment account that you can buy stocks with. The way it works is the government allows you a contribution limit every year to put in this account. What does that mean? Well, you can put money in this account without being taxed. That's where the name comes from, a tax-free savings account. You can only open this account up when you're 18 years old, and it may differ depending on the country you're in. So make sure to look up online what your country is allowing and if they have a TFSA. In Canada, the government gives you a contribution limit of usually $8,000 to $20,000. For example, let's say in 2020, $12,000 that you can put into your tax-free savings account. That means I can put $5,000 in, I can put a total of $10,000 in, I can put a total of $12,000 in without being taxed. And I can invest with this money, and any earnings that I have on this money will not be taxed. So, can I put in $15,000 in 2020 if the limit is $12,000? No, I cannot. The other $3,000 above the $12,000 will be taxed. So do not put more than your contribution limit. But the great thing about this account is that the contribution limits actually accumulate over years. So if you're a young investor, you're 18 years old, get on this now because your 30-year-old, 40-year-old self will love you for it because you will have, say, $200,000 of tax-free money that you can put in. Now this is just an example, but let's say you did have $200,000 in this account when you're 30 or 40 years old and it's tax-free. Well, that means you would have saved $80,000 in taxes if the tax rate is at 40%. This tip is really about the fundamentals, and all my tips are going to be about the fundamentals. It's not to jump you in. I'm not going to sell you a dream or that you can day trade within a week because that's simply not true. But get these fundamentals started and you will really be off to a great start. Tip number 3. This is a quick one, but it's so crucial because I see this mistake all the time. Don't let emotions or hype dictate how you will invest. Listening to your emotions or listening to hype when investing in the stock market will almost always lead to a bad investment. One example I can think of is NIO. It is a Chinese electric vehicle company, and it is also an IPO, which is an initial public offering. IPOs tend to have a lot of hype around them, and this is what we saw with NIO. We saw a lot of investors jump in early thinking they were going to get a cheap price on this stock, but the stock tanked. The hype drove up the price, and people's emotions about electric vehicles thought this was going to be a next Tesla. So if we look at NIO chart, which will pop up right here, you can see that it has tanked and it's done really poorly. So don't let your emotions and the hype. It's so important to really follow this rule. If you're going to listen to any rule, listen to this one. You know, I see this mistake all the time. And this will bring us to our next tip. Tip number 4, be patient, buy low, do research. It's kind of corny, but it's so true. I will give you an example of why being patient can pay off. I was watching Apple for the last year or even longer, but let's consider I was looking at them in 2019. I noticed that they had a high of about $230, and at the time they were going down to $190, $180, $170, $160, and even $150. I waited till they hit $150. I didn't know when they were going to bottom out, but they hit $150. I saw a positive trend going back upwards when I saw them hit $150 then 151, 53, 54, 55, 57. And so I knew the Apple stock was trending back up. I was patient. I waited for the stock to hit a low price, and I made a good amount on this trade. I ended up selling this stock around $230. This is real practical proof that this works. And this also proves that buying low works. That's probably the corniest part of this all. Warren Buffett says it. I think every investor has probably said this, but it's so important as a beginner to know this. You don't want to buy stock high. For example, if the stock's highest point has been $300 and it is sitting at $290, you can assume that it may go up to $300, but that's only giving you profit room of $10 per share. That is not worth your time. You want to see a stock that has had a high of $300 and is sitting at $180. That is a good investment. So remember that and do research. This goes back into not letting your emotions or hype decide which investments you're going to make. Look at the cash flow. Look at their liabilities. Look at their assets. If they're making a profit, their operating expenses, their PE ratio. All this data will give you a good idea if this is a healthy company and something worth your time. Tip number 5. So this is a big one for beginners because it seems so attractive to do this. And my tip is do not day trade. Day trading takes a high level of expertise to do efficiently, effectively, and actually profit on a consistent basis. Also, it's very high risk, and if you don't know what you're doing and you're just starting off, there's almost zero chance you're going to make money. A lot of people on YouTube like to say, this is how you should day trade. This is how to become a day trader. Make $1,000 a week in only 24 hours. These are dreams. They're not real. It takes a long time of practice to actually get good at day trading. I do not day trade. I short-term trade and long-term trade. So usually within a window of 1 month to 5 years, really, depending on the time of the market. So as attractive as it seems to day trade, I'm telling you, there is no proven way to make money on a consistent basis. There's a lot of tactics and theories that you can use, but if someone's trying to say, use this or follow me and you'll make a lot of money, it's generally not true. One more thing is that day trading, since it's such a short period of time, it generally has a higher risk. The longer you hold an investment, the less risk you're going to have with it because the market works in a cyclical manner and has highs and lows. As long as you hold through the long term, you will regain what you had lost. So to give you a personal example from me, I did day trade for about 3 months. My friend and I had a challenge. Let's buy and sell a stock every single week. We did this, and after about 3 months of doing it, we broke even. So it's not like we put a huge amount of time and energy into this. We did really try and we did our research. That being said, we broke even and I found it to be very stressful. It took a lot of my time and overall it just wasn't worth it. Short to long-term investments are so much less work and have so much more upside in my opinion. That being said, if you do want to get into day trading, again, be patient and do a lot of research. I mean, I wouldn't get started in day trading with actual cash for at least a year of doing research, following the markets, learning theories, because again, it's very difficult to day trade. Thank you to everyone who watched through the entire video. I really hope it helped you. If you're not subscribed, take a moment to subscribe. I'm going to have a lot more tips and tricks on investing in the stock market shortly. Be sure to like it if you enjoyed it and leave a comment with any questions and I'll be sure to get back to you. Thanks again. This is Thomas Durham from Stock Outlet and I'll see you in the next one. Bye.